Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. Looks like we're up and running fine. If anyone has any issues as we go along, please feel free to let me know. As always, keep in mind that no one trade is guaranteed to profit. Each and every trade that you take has risk involved. The flip side of that is each and every trade that you take has a nice potential for profits as well. The idea is to go about things where you're managing your risk in a way that makes sense to you in terms of trade size, stop loss, exposure, etc., while going after those potential profits. And hopefully what we cover today will improve upon the P&L at the end of the day. No promises, but what we cover is coming from an educational perspective and not to be taken as financial advisement. Now, what is fundamental analysis real quick before we get onto the live charts? Basically, it's the news. It's what's happening around the world or locally that could affect the markets. And so it can be different types of fundamental news, such as regular economic announcements, announcements that are scheduled on an economic calendar, for example. And we'll look at some of those that have come in already and that may come in later today and kind of contemplate the effect that that news may have on the markets. And then there are other types of fundamental news like extraordinary economic events that are less predictable in terms of scope and timing. This war with Russia and Ukraine is obviously one of those types of extraordinary events that certainly is having effect on the economy and different instruments in terms of the price movements. And so we'll have a look at that effect as well as best we can to try and predict what might happen moving forward with, say, something like crude oil or gold or the strength of different currencies, etc. And if you have any questions as we go along, please feel free to do so. What I like to do as we get started is, in the fundamental analysis, look at the headlines to make sure we understand fundamentally which way is the wind blowing, so to speak. And that way we have a preference even before we look at the charts maybe as to what direction you might prefer to trade on a particular instrument. And then if you happen to find price levels that you like with your technical analysis, then you go after it. So this is a headline that has come out recently. United States weighs largest ever draw from emergency oil reserve. That sounds interesting. Largest ever draw from the strategic emergency oil reserve. They're trying to bring the prices down on crude oil, obviously, to bring the energy costs down on gasoline and other related products. Now, you go on to read the article and they're talking about 180 million barrels being released over the next several months. You say, well, that sounds like a lot, 180 million barrels. Maybe until you realize that the US uses 20 million barrels a day, just the US. That's not counting globally the amount of oil used. And we all know oil is a global commodity. So the US releasing 180 million barrels doesn't just affect the price in the US. It's going to be averaged out for the total global supply and price effect. And so it sounds like a big deal, and the oil prices have pulled down with that news of increased supply from this release. But you have to understand what are the long-term implications if that's less than 10 days worth of usage, 180 million barrels for the US alone usage rate. And so you start to look globally, what effect can that have? It has some effect, obviously. More of a knee-jerk reaction, I think, with the oil price coming down so quickly with the news breaking about this. And so you might find a price point you'd like to go the opposite way, understanding that this war in Ukraine is still going on. There's fears of supply disruptions with the large amount that Russia has traditionally supplied to the world. And so this is the situation, large reaction maybe to a headline that maybe won't have such a large effect on global supply and demand in the end. Now, there are some other nations talking about also releasing, trying to time it with the US release to release some of their strategic reserves. And then that could have more of an effect. And so we'll keep an eye out for that. And if that type of fundamental news breaks, it could be the same sort of knee-jerk reaction, even though in the bigger picture, maybe it's not such a big amount compared to the global usage rate that's being released from these reserves. Now, European Central Bank sees inflation stabilizing around 2% target. Well, it's interesting because their inflation right now exceeds 7%. And so month-to-month inflation, year-to-year inflation, much higher than their 2% target. And so the European Union basically is saying, we don't need to raise interest rates. We don't need to get rid of the stimulus measures that were there to help out the economy, because the opinion of the European Central Bank is inflation's not that bad. It's only related to temporary high energy prices, and when energy prices come down, inflation will be fine. And that's the opinion of the European Central Bank. And so it seems that they're not going to be acting as the US is to raise interest rates so strongly and rapidly that, like the US has promised to do this year. And so you look at the bigger picture then on longer term moves, and you might say, well, then the US dollar has reason to strengthen if the US is being more aggressive with interest rate increases, and the euro maybe has reason not to strengthen as much if they're talking about not taking those measures, not raising interest rates so quickly, etc. Because the viewpoint of the European Central Bank is there's less of an inflation problem than what the US views with their monetary policy. So an interesting setup to where interest rate increases in the US could lead to stronger US dollar, whereas lack of interest rate increases, if that ends up being the case in the European Union this year, could maintain a weaker euro potentially. So that's just one effect. Obviously, the war and those sort of fears also have an effect. And likely, if there was a peace deal with Russia and Ukraine, you'd probably see the euro strengthen rapidly. So there are different factors affecting, but that would be more of a short-term effect, a peace deal, whereas a long-term effect, interest rate policy for the coming year and after would be more of a longer-term effect, fundamentally speaking. Okay, so some of the economic announcements that came in still supporting the case that there is indeed inflation. This is out of the European Union, the French numbers specifically. CPI data higher than expected across the board here. Year to year, month to month, again, higher inflation on, this is consumer pricing index, prices rising faster than expected, year over year, month over month. But we just talked about the view of these inflation problems as being viewed maybe not as serious by the European Union as it is by the US. If we go down, look at some other numbers, out of Italy, consumer pricing index higher than expected. Okay, again, in the European Union, higher inflation numbers on this data coming in than expected. South Africa, 10.5% year over year inflation on the producer pricing index, the PPI data. Again, showing almost any place we look around the world, higher than expected inflation, and that's even when the expectation is already high. 10% expected inflation on PPI data year over year, and it came in higher than that, 10.5%, similar to numbers out of the US. So we continue to see high inflation data and numbers, and that might give you a feeling as to what you might do in terms of investing on gold. If you see gold pull down with a strengthening US dollar, then perhaps you see that as an opportunity to get into inflationary safe haven like gold. So these are just some fundamental things to keep in mind as we get onto the charts, that inflation is still there in many areas around the globe, higher than expected inflation at that. And then we've got more data coming out of the US, some jobless claims numbers, et cetera, later in the day. So that kind of sets us up then to say, let's get on the charts. and let's try and get an idea as to which entry points we prefer, which signals do we trust from the web trader and our mobile app, etc. And we'll keep the fundamental news in mind. So let me expand the view of my mobile app, of AvaTrade's mobile app on my phone, I should say. And what we can do, since we have an idea of the fundamental understanding, let's take a look then. If we click on this tab in the lower right, and you can trade on your MT4 and MT5 accounts with us using this mobile app, and you'll see it has special features that you don't find in the MetaTrader platform and app. So if we look at Market Buzz, it gives us fundamental news about stocks. All right, so if I tap on Market Buzz, we already understand the fundamental situation globally with the big headlines we looked at. Now what we can do is wait for it to load, and it will give us links for the top trending stocks and the articles that are related to it. And literally it pulls in hundreds and hundreds of articles. So Facebook's Meta Platforms Incorporated is the top trending stock right now. You can tap on that. It'll pull up all kinds of articles for you to look at that are related, time-stamped, that are related to Meta Platforms. Tesla is trending large, Axis Bank, Amazon, and you can scroll down and see others that are trending with lots of recent articles. And so this is an easy way to pull up your fundamental news that basically the search is done for you, and you have all kinds of articles that you can view within that section of the app. Now, what I like to do a lot of times is let's go look at, in this same menu, some Forex signals or crypto signals for those of you who can trade cryptos. And so if I look at analyst views, for example, I've got some signals coming in that I can start to look and see if it makes sense. Okay, USD going down against the ZAR, the South African rand. We just saw some numbers out of South Africa that show really high inflation, and you would think that that maybe would weaken the South African rand, and the USD in general, with interest rate increases potentially coming further this year, USD in general you would think could be strong. And so if the short-term preference was the US dollar was dropping against the ZAR, that movement might have already occurred. But now I can take a look and see, is there a support level that was reached so that I could maybe go with the US dollar against the ZAR in the bigger picture, maybe not on a short-term move. Okay. Why would the US dollar be weakening today? Because fear is down a little bit. There's some anticipation of more peace talks tomorrow between Russia and Ukraine. And when fear drops, the US dollar tends maybe to lose some of its strength because it tends to act as a bit of a safe haven when fear is up. And we can scroll through. Ripple expected to climb against the US dollar, etc. So you can start to look and try to find something that makes sense to you. And maybe you look and you say, okay, New Zealand dollar to drop against the USD. If you expect the US dollar to be strong with the monetary policy already being stated that multiple interest rate increases are expected in the US, then maybe you look and you say, wow, I like this signal because it aligns with my fundamental view of what's going on. There's fear about the war. There's fear about inflation and the response that will bring in the US with increased interest rates. And so all of that could serve to help this movement out. And so when you find a signal that makes sense in your mind to what's happening right now, fundamentally, then tap on the signal. And it'll bring up the technical analysis for you that's been done by Trading Central. Okay, and so here's the technical analysis. It's got the price levels drawn. Here's the support level down here is an old price level where it got stuck and went up. So this is a support area here as the price could could drop down towards that support level. So this up here is the resistance level that if it goes up and breaks above that price, they say then the sell position's no good. Something went wrong fundamentally if this reverses and goes above the blue line. So they say the preference is to sell the downside with take profits at these price levels down here. So that's a market move. We look at the chart, we see if it's where we like it. If it's still above this, the take profit zone down here that they have with the red lines, then maybe you choose to do a market move and put your stop loss above the fail-safe line here, this resistance level. Then you also could back this up with the alternate scenario, which is to buy if the movement goes above this line. If it establishes an uptrend by breaking above this resistance, then they say buy. So you can have a pending order up here to buy with take profits at these price levels, and at the same time do a market sell with your stop loss up here and your take profit down at the take profit zone down there between those two red lines. So this is the way you read these signals, and it's nice that the technical analysis is done for you. And I think it makes sense to do a quick fundamental news review like we did before you go into the signals, so you know which ones maybe you trust more, the ones you would prefer to trade on. And so maybe we go to a full screen view. Let me leave the screen share on my phone. And what we'll do is we'll log in on the web trader, which has all of the same features as the app, but on a full screen. So what we do is we log in here, and you'll be looking at the web trader platform, which looks like this, okay? And it has the same features that we were just using: Trading Central, Economic Calendar, Market Buzz, that's with the stocks, with the articles it brings up, Analyst Views we were just looking at with the signals, and Forex Featured Ideas. So everything's there, and you can trade on any of your accounts from this platform and from the app. You can switch between your accounts here. Okay, I'm on this one. I know it says real account. It's actually a dummy account. For webinars, we can't use an actual real live account. It has live feeds, obviously, price feeds, but I am on basically a demo account here. Now, what we were looking at then in that signal was NZD USD. If I can spell NZD correctly, there we are. What did I do? My typing skills have diminished. I better go back to typing school. Okay, NZD USD, here it is, otherwise known as the Kiwi dollar. And so what we look at here is, let's go back to the 1 hour candles. And we can see indeed over the past several hours, this has been dropping. New Zealand dollar against the US dollar has been dropping as the signal predicted. Now we can take a look and say, well, did it reach the support level? It certainly reached a support level right here. Okay, you see support, back up. It hits this price, back up. Once it broke below, that became resistance. And then once it went back above, it became support again and back up. So as this was dropping, it made sense that here you might have taken profit. And you look across and you say, that was a support level here, back this way in time. So support up, took momentum to get below it, became resistance, took momentum to get above, and became support again. So this is the first spot where you could have been thinking about taking profit, all right? So that move on the signal we looked at, and the signal was a few hours old, looks like it carried out to what could have been a nice profit. Now the question is, what direction do you think this might go? We know there's some optimism today about strategic oil reserve release. This is for short-term outlook. I'm not talking long-term on the US dollar, which is maybe outlook is it could strengthen with interest rate increases. But short-term, I mean right now, there's some optimism in those headlines we looked at, that oil reserve large release announcement may be coming. More nations saying they will release oil, and that reduces fear of inflation on energy costs then. And if there's a reduction in fear, that tends to maybe weaken the USD in the short term many times. And so if that's the view, and also that there are more peace talks maybe coming tomorrow, That's also one of the headlines that's out there. And so if that creates optimism between now and tomorrow, even if the peace talks fail, there's optimism that maybe something will happen. That tends, positive optimism, less fear, tends to weaken safe haven currencies. And the USD many times, not always, but many times acts as a safe haven. So you might say fundamentally, you understand why the US dollar dropped. I'm sorry, the New Zealand dollar dropped against the US dollar. And then in the short term, you might understand maybe this support level can hold and you can get a bounce back up to resistance level, maybe up somewhere like here, or you could go to a higher resistance level up here. Okay. And why is this a resistance level? Look over here. Resistance, back down. And then it hit here, it went above once and right back down. It was resistance and down again. So then I can look at this and say, all right, I have an option to use AvaProtect if I want. So I can relax if it goes the wrong way, and I have a set amount that I paid for protection for maybe a day or two. And then I can say, okay, I'll pay for the protection. I don't care how far it goes the wrong way. I won't lose anything more except what I paid for the protection during the protected time period. Or if I'm confident with the move, I could just use a stop loss. And since we're close to the support level, maybe I put a stop loss down here. That's up to you, whether you choose to put a stop loss or not. Because we're in a situation where the US dollar easily could strengthen again and pull the New Zealand dollar down further, if some kind of fear hits about the war, about oil, whatever, then maybe you choose to use AvaProtect instead. In this example, let's use take profit and stop loss. So if I want to take profit before this resistance up here, I'll draw another line, and let's say just before the resistance, I say here I want to take profit, 69.73. So take profit, 69.73 as an example. And then my stop loss, I say I want below this support level. So maybe I draw another line and I say stop loss right below that support right there. Each time I click on the chart, it's resetting my numbers. So let me put this again, 69.73. That's here, resistance. So take profit mark up here. And stop loss down here, 69.23, is below that support level. So if it breaks the support, then okay, I'll give up on it. That's the idea with this setup. So as long as it doesn't break the support, I stay with it. Looks like my potential profit is about double what I'm risking. Now I can use the risk management tools of the app or of the web trader to calculate what trade size I want to take. So if I know that I'm willing to risk, I don't know, 250 on this trade, whatever amount you decide, 1% of your balance, 0.5%, 5%, whatever it is, you go into it knowing how much you want to risk. So I'm going to make up a number. Let's say I know I want to risk 250. So possible loss to my stop loss, 17. So I know I can go larger. So if I go one full lot, I'm risking 169. Okay, I can do more than that. 1.5. Now I'm risking 255. That's pretty close to what I said I was willing to risk, 250. Okay, the price is moving, so it's changing as it sits here. Almost 500 profit, 250 risk, approximately about 2-to-1 ratio possible profit to risk. Okay, so I've got everything calculated in my risk management, and then I can set my trade in motion. Okay, so very simple process to go through, 5 or 10 minutes. What are the big fundamental news stories? What's happening? Look at the economic announcements, what's happening there, and then get to the charts, do your technical analysis, set your price levels where you see important price levels of support and resistance, and then make your trade accordingly. And if you find an opportunistic entry point that's going in the direction you wanted, and you have the benefit of a nice support level where you don't have to risk much and your potential profit is larger to the next resistance level, then that's what we mean by opportunistic entry point, meaning you wanted to buy anyways, maybe, because of the fundamental news, And then you look at the chart and you say, ooh, technically it's an opportunistic entry point because I'm close to the support level, so I don't have to put my stop loss far away. And my potential profit can be larger without even having to break a resistance level. Okay, so that's the power of combining fundamental news with your technical analysis. And then you can find your open positions over here. Okay, and hopefully within a short period of time, it overcomes the small spread and we move into profit and on it goes. But we've got a measured risk, right, with the stop loss. And we easily could have used AvaProtect as well, rather than relying just on stop loss. So you have your options with risk management. Any questions at this point? Kevin, you're asking, how do you see the price levels on the web platform? You look at the candles. We're looking at the candles here. So if I'm scrolling back now with my mouse, so I have a view where I'm up close, or I can scroll back and be further away. And this is the Australian Canadian, for example. And so I can see price levels that look important, like right here. You see where these wicks hit and bounced up, hit, bounced up, hit, bounced up. How easy would that have been after you already had confirmation that this was support, have a pending order down here, and this time when it hit, you buy, and look how easy of a profit that would be, right up off that price level. And what you usually notice is areas of support, like you see here, in the past used to be resistance. Resistance, 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 resistance. Once it breaks through with a large breakthrough candle, many times you see the momentum, then it becomes support. Support, support, support. Okay, so that's how you see the price levels, exactly like that. Kevin, if you're asking about getting alerts, set those on the mobile app, AvaTrade Go mobile app. You can set price level alerts. Good question. I don't believe we can set them on the web trader. I could be wrong, but I've seen the price alerts set up through the AvaTrade Go mobile app. Okay, so let's look at maybe a different instrument. Crude oil, right? We saw the headlines on crude oil, so we might as well look. So I've got some old lines that I drew on the 1 hour candles here. We see crude oil came down and bounced right off that line that we drew from a previous webinar. Support, up. It came down. Here's the news about the oil reserve release, right? Down came crude oil. Knee-jerk reaction, as I called it earlier. And then you see support right where you'd expect it. And maybe it'll push down to this support level down here. Okay? But let's look bigger picture. Let's go 4 hour candles. Scroll back a bit and get rid of some of these lines. We'll draw new lines maybe. Okay, so we've got a bigger area of support down here around 88.70. Another area of support right here around 99.70, so right around 100. Okay, so that might be quite a risk to have your stop loss down below 88, 89 to get down here. So maybe you decide, okay, I think oil could push down further before going up because of these announcements about oil reserve releases, talks about peace negotiations coming through tomorrow. So maybe you think crude oil could push down further before potentially climbing back up. If that's how you view, then maybe you say, let me put a pending order down at this more major support level, down around 90. And so as an example, I could say, let me put a pending order here, just above 90 maybe, 91, or maybe at this support level here. Okay, support, support, up. So maybe you're looking 95. So execute when price hits. Why not buy now. If you know there's high inflation, worries about supply disruptions with Ukraine and Russia having the war going on, why not buy right now? Because fundamentally there's news causing oil to drop, at least temporarily anyways, right now about strategic oil reserve releases. And that could continue through the day and into tomorrow. So maybe you anticipate this could push down a bit further. But then you understand bigger picture, this war is probably not ending right away. And more fear could hit the market eventually. And so if that's how you feel, and I'm not saying that's how you have to feel, but if that's how you feel, the fundamental news is on the side that oil could push down further right now. So it could make sense if you're bullish on oil in the bigger picture, but the fundamental news you're reading right now says oil could push down, then that's where maybe you wait for a better price point before you buy, if that's the move you want to make. So reading the tea leaves, so to speak, with the fundamental news. A buy position right now, the fundamental news is working against you today, but it's working for you if you want to buy from a lower price, potentially, okay? So unlike the last position that we opened, this is not near the support level maybe that you want. It's not there yet. So in this case, maybe you're going to be more patient. So execute when price hits. We could say if it hits 95, which is this line I drew here, this support level, then maybe that's where you decide you want to buy. Okay, then you put your stop loss below that support level, maybe at, and if you want to get below this support level, so you're protected by 1, 2 support levels where you see support, 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 support. So if you get your stop loss down here at say 87 or 88, you're below all of this support here where it had trouble dropping below. Get below that price, your stop loss, for your stop loss to get hit, it would have to be a major move down if it gets down to say 88 in the price. Okay, now you look at your potential profit. You could say, I'm not going to be greedy and wait for it to come up to this high of 130 that's on the screen. Maybe I just go to this resistance level here, 116, because it went there 1, 2, 3, 4 times on the screen. Okay, so take profit, conservatively thinking that maybe it could get up towards 120 again, and taking early before the 130 high at 116. Okay, so now we're looking, we say, possible profit 1,050, possible loss 350. Perfect. Except maybe you realize, wait a minute, I know I only want to risk 250 per trade or whatever it is that you want to risk. And so I see possible loss 350. So then I say, you know what? Let me change it to 4 barrels. Okay, 280. 3 barrels. 210. So that's up to you. You can't do half a barrel, so we can't do 2.5 barrels. We have to do either 3 barrels or 4. So do I want to risk a little less than 250, or do I want to risk a little more? And that's up to you as a trader. What amount do you want to risk? The point I'm showing you here is before you place your trade or prepare your pending order, you can have the risk management calculated for you so you know what you're getting into. So if this is what I decide I want to go after, a potential profit of 840, risking 280 to my stop loss, there it is. So now I'm all set up. So I went with one live move, okay, that's based on the current fundamental news. And I went with a pending order that's hoping that the current fundamental news gives me the better price to then go in the opposite direction on with what you might believe to be the larger driving fundamental news in the bigger picture. Okay, so 2 different strategies. One, a patient move and waiting for more of the longer term movement on crude oil that you might expect in the coming weeks. And the other, going with what you might expect to occur right now with the current news situation. Any questions on anything? I think this is a good spot to open it up for a suggestion of an instrument maybe to look at. Let me know if there's something you would like to look at. Maybe gold, maybe an an index. Okay, gold is the winner. It came up first. So let's look at gold. All right, so some price levels that I've drawn out in the past webinars that look somewhat important in terms of support and resistance. And we see so far today, if we look at the smaller candles, choppy day for gold. Up, down, up, and it's just not finding a direction, right? And many times when that happens, then you can draw the area of support and the area of resistance in the short term. And you see we're right in the middle of that. And you know, gold is the #1 safe haven typically when there's fears of inflation. And so what drives inflation largely right now? Inflation fears are high energy costs. This huge rise in the cost of crude oil, which then affects every business and every product in terms of price inflation, because every business, every factory, every store is affected by the delivery cost from gasoline going up, the production cost from energy costs going up, etc. So it's a huge driver of inflation fears when crude oil went flying up like it did in price. Okay, so now we're looking at a situation where there's differing news going on. There's talk of strategic crude oil release, the release of reserves out of the US, and other countries that say they may chime in at the same time to add to that momentum of releasing from their reserves. That then could pull oil prices down a bit, which is why we prepared a pending order maybe from a lower price on crude oil. And if it releases some fears of inflation, because crude oil prices are pulling down a bit right now, then that means gold has less pressure to rise and some bearish pressure maybe to allow it to come back down some. Okay, so that's why we see this, after a rise, a pullback in gold. We don't see a strong move flying up because of this pullback in oil prices that it could be related to it. And then at the same time, we don't see gold plunging either. And you say, why not? Because we just looked at the economic announcements, right, on the calendar, and we saw over 10% inflation in South Africa. We saw higher than expected price indexes out of the European Union, etc. Okay, so we see data showing high inflation still, which typically drives gold up. But now we also have this news about the oil maybe being released from reserves, which is lowering the demand for gold then, as oil prices are being pulled down by that. So what we have is a ranging movement. It hits resistance, back down. It hits support, back up. It gets near the resistance, back down. So what you could do in a situation like this is say, okay, if I get near the bottom 25% of this range, if I get somewhere down here, then I'll have a pending order to buy with my stop loss below the support level that it's ranging between. And if the movement gets up near the resistance, 25% from the top end or 75% up, then I'll sell with my stop loss up here. So that if it continues to range, I only need to win once to cover what I'm risking for 3 losses. I lose 25% of this distance once, and then maybe it plays around and comes back after hitting my stop loss. If I win once off of buying from down here and it goes up and hits my take profit, or selling from up here and it goes down and hits my take profit, I'll make 2 or 3 times what I'm risking to my stop loss if it loses. So you can play it as close to the upper resistance as you want and have your stop loss somewhere above. And play this as close to the support as you want and have your stop loss below. The closer you are to the support, if it does go the right way, you make even larger profit. The closer you are to the resistance, if it does drop the right way, you make an even larger profit and you're risking less. Okay, so maybe you go 80%, 20% risk. Okay, so it's a nice strategy many times to trade on the ranging movement when there's mixed news on a particular instrument. And certainly for gold, it's mixed fundamental news. We've got high inflation, causes gold to bounce off the support level and not go plunging down. We've got strategic oil reserve releases coming, lowering energy cost, thereby lowering inflation risk. So maybe gold doesn't have the momentum to break this resistance. So if it gets near here, sell. If it gets near here, buy, because it's ranging between these prices. Now that ranging pattern can end, right? The strategy eventually will lose. It doesn't range forever. So the key is to try and find a ranging movement that makes sense fundamentally, which I think this one does. There's an explanation why gold is ranging up and down between these price levels, and then wait for the price that you like. And hopefully you hit one or two times before it breaks and goes bad. And even if on this one you lost on the first try, if you have similar setups over time, as long as you win even 50% of the time, you're going to be an overall profit. Okay, that's the idea. So don't look at it in a micro aspect that this ranging pattern has to win. Ranging patterns in general hold and repeat up and down movements until they break. And as long as the news doesn't change much, then the ranging pattern is expected to hold better than if the news changes. And that's kind of the situation. So that's a nice strategy you could set up on gold. And you don't have to wait for the movement. You could put two pending orders. A pending order up here to sell with the stop loss here, and a pending order somewhere down here to buy with the stop loss below the support. And that's it. You're trading on the ranging pattern, and it could lose, but you're going with what makes sense fundamentally along with the technical analysis. All right. I think this is a good place to stop. I saw some more requests for gold, so it looks like we looked at the right instrument. Any last questions before we end things? Okay, great. I don't see anything popping up. Thank you for joining, and good luck trading the rest of this week. I think we're going to see some nice movements, maybe some positive energy as we get closer to more peace talks tomorrow, and as Biden announces the strategic oil reserve release, if that's what he ends up doing, could create some positive momentum on the markets for indices, stocks, crude oil dropping maybe, etc. But also be wary of the peace talks potentially failing, and then a reversal back from price levels maybe that you like. Okay. All right, everybody. Thank you for joining. Until next time, wishing you great profits.